What if I tell you that 82% of small businesses fail because of poor cash flow management and not the lack of sales? The difference between success and failure often comes down to one thing: how you handle your books. In this video, I'll reveal 3 bookkeeping mistakes that are silently killing your business and exactly how to fix them starting today. These aren't complicated accounting tricks, but simple habits that'll take minutes to implement, yet save you thousands. You think sales are your biggest challenge, but the real problem is hiding in your bank account. Many business owners focus on bringing in revenue while completely losing track of where the money actually goes. Without a clear record, you could be losing thousands without even realizing it. Take the example of a bakery owner who wasn't tracking her ingredient costs. She assumed her flour and sugar expense were consistent, but over 6 months, she ended up paying 20% because suppliers quietly raised price. That mistake cost her nearly $8,000, which she could have negotiated or shopped around for. Research shows that 60% of small businesses don't reconcile their bank account monthly. That means they don't compare bank statements to other records to catch errors, fees, or unexpected charges. One landscaping company missed a $500 monthly software charge they weren't even using anymore. It took them 9 months to notice. The IRS sees this all the time with deduction. One electrician lost $15,000 in legitimate write-offs simply because he couldn't produce a receipt. His tax bill skyrocketed, and there was nothing he could do to fix it after the fact. Mistakes like that can turn tax season into a nightmare. Without clear records, you're either spending hours scribbling to organize a receipt or risk leaving money on the table. It also prevents you from making smart decisions. How can you invest in new equipment if you don't know your true cash position? The fix is straightforward. Separate your personal and business account completely. Makes it fun can make tracking nearly impossible. Open a dedicated business checking account, get a business credit card, and move all transactions there. Many banks offer business account for small businesses with no additional cost. Next step is pick one day out the month to reconcile. Most accounting software connects directly to your bank feed, so matching transaction takes minutes. Set up a calendar reminder so it becomes a routine. Those 2 to 3 hours could save you thousands in unnoticed fees or duplicate payments. Avoiding this single mistake protects you from audits and cash flow surprises. When every dollar is accounted for, you spot waste faster, plan taxes accurately, and have real clarity about your business financial health. Now, let's talk about why your financial statements might be lying to you. Because revenue alone doesn't tell the story. That consulted client celebrating 6 figures in sales, well, she wasn't tracking how expenses were quietly eating into her profit. Your profit and loss statement might show healthy revenue, but that's only part of the picture. Many business owners make the mistake of celebrating top-line numbers while missing the warning signs buried in their expenses. Take the case of a marketing consultant who was still about a $15,000 a month. Until she finally reviewed her expenses and carefully, she discovered that she was paying over $3,000 in subscription that she wasn't even using at the time. Study shows that nearly half of small business owners don't review their financial statements monthly. Without this regular check-in, you're essentially flying blind. You might not notice when a vendor jacks up prices, when a subscription order renews at a higher rate, or when certain expenses start eating away into your profit margin. Cloud accounting tools solve much of this problem automatically. When you connect to softwares like QuickBooks to your bank account, it categorizes the transaction and flags the unusual spending. A cafe owner I knew got an alert when his dairy supplier increased prices by 12%. Because he caught it early, he negotiated back to the original rate rather than absorbing the extra $2,400 annual cost. Set aside 30 minutes weekly to review 3 key numbers: gross profit, what's left after product costs; operating expense, your fixed costs to run the business; and net profit, what actually lands in your pocket. Comparing this across months can show trends that you would otherwise miss, like how your busy season might actually be less profitable due to increase in overtime pay. One electrical contractor thought he was having his best year yet until he ran the profit margin report. While revenue was up 15%, his net profit had dropped 3% because material costs had spiked. Without checking beyond the sales numbers, he would have kept buying from the same supplier at the inflated rate. Accessibility of cloud accounting means you can check these metrics from anywhere. One bakery owner reviews her dashboard on her phone during slow afternoon hours and quickly spotting that the weekend cupcake sales consistently outperformed the weekday muffin, which helped her adjust production schedules and reduce waste. These regular check-in also prepared for tax season. Instead of scrabbling through receipts, you'll have everything organized showing exactly what you can deduct. One freelancer avoided a $4,200 tax bill because her categorized transaction clearly showed the legitimate office deduction. Now, let's go over the tax trap that most business owners don't see coming. Many business owners treat taxes as an annual headache, but that approach leads to costly mistakes. About 30% of small businesses face penalties for underpaid taxes because they wait until April to think about their obligation. The IRS doesn't just send you a bill, they charge interest as well, and the fees can pile up quickly, turning a manageable payment into a financial strain. Let's take for example this videographer who learned the hard way. He had his best year yet, pulling in $85,000. But he didn't set anything aside for taxes. When April came, he owed $12,000 and had to take a high interest loan to cover it. The penalty alone was high, plus the monthly interest on the loan. If he had made quarterly tax payment, he would have been just fine, but he just didn't know. The fix is straightforward. Open a separate tax saving account, set up an automatic transfer for a percentage of every payment you receive. Most sole proprietors need to save at least 25 to 30% to be safe. A landscaping company owner started doing this and avoided $3,200 in penalty he paid the year before. His bookkeeper calculated the rate based on the previous year's return and adjusted so he can save money. To make the right amount of payment for your estimated taxes, all you have to do is see the amount of money you paid last year. For example, if it was $4,000, go ahead and make quarterly payments of $1,000 each month for the next following year. So then you'll be able to bypass with the 100% rule. Or you can pay 110% of the $4,000 on a quarterly basis to the IRS for the next coming year. So then you'll be fine. They won't charge you a penalty for that as well. Workers' classification matters too. Mislabeling employees as contractors can trigger IRS fine. A cleaning service paid $4,500 in penalties before hiring an accountant to properly classify their team. The accountant also helps set up a retirement plan that can reduce their taxable income. The trick is to stop treating taxes as a once-a-year tax. Schedule a monthly 20-minute review with your bookkeeper or your accounting to adjust any withholding needed. It will come to a time where you need to stop doing your own books. Even with good system, there's a point where professional help also pays for itself with the save of penalties and uncovered deductions. Bookkeeping does more than just keep you in compliance. It's your roadmap for making smarter decisions. Start with one change this week. Separate your bank account if they're mixed, review your last 3 months of expenses for hidden costs, or set up automatic transfers for tax saving. Pick the step that will give you the most clarity right now. Progress matters more than perfection. A restaurant owner saved $200 a month just by switching to a cheaper POS system after reviewing transactions. Another client avoided IRS penalty by setting up weekly reminders to log in receipts. Small, consistent action build financial control over time. The numbers always tell a story. Don't forget to like and subscribe to the channel and click on the link below. I do own an accounting firm and we do offer bookkeeping, so click the link below for a free consultation.